Okay, so the question reads, the question for November 2019, question 5A, it reads, 𝗏𝐂𝐀 Limited has prepared its consolidated financial statements for the year which ended 30th September 2019, extract of which are shown below. Also provided below an extract of consolidated financial statement for the year to 30th of September 2018. We have extracts there for the consolidated financial statement for 2019-2018. We have a profit before interest and tax, finance cost, tax charge, and then we have ordinary dividends paid, preference dividends paid, the profit attributable to non-controlling interest, and then we are told you have also obtained the following information in respect to company's share capital. Number one, ordinary share capital on 1st of October 2017 was 15 million shillings, 15 million made up of shares of 5 shillings per value. Number two, 𝗏𝐂𝐀 Limited issued 500,000 ordinary shares at full market price on 1st January 2018. Three, 𝗏𝐂𝐀 Limited also made a right issue of 2 new ordinary shares for every 10 ordinary shares held as at 1st of April 2019. The right issue per share was shillings 42.5. Market price per share as at the same date was shillings 48. The number four, you're told 𝗏𝐂𝐀 Limited also had 1 million 6% shillings 10 value. That is the value non-redeemable preference shares as at 1st of October 2018. So what are we required from this particular question here? Roman 1, we are required to compute the basic earnings per share for the year which ended 30th of September 2018. And Roman 2, we are required to compute the basic earnings per share for the year which ended 30th of September 2019. So in this question here, we are required to compute the basic earnings per share for for 2 years. And the first year ended on 30th of September 2018. The other one ended on 30th of September 2019. So you can see the financial year of this company, which is called 𝗏𝐂𝐀, was ending on 30th of September 30th September. So basically, if this year ended on 30th September, or basically the financial year of the company is ending on 30th September, it means that year is starting on 1st of October. So therefore, you can say that this year started on 1st of October 2017. That is when the year started. This one, the second year started on 1st of October 2018. So mean that we are required to compute the earnings per share for this year and for that year. Automatically, when computing the earnings per share of a company, and you are given 2 financial years, there is no way you can start by computing earnings per share for the second year. You always start by computing the earnings per share for the first year. So therefore, we start by computing the basic earnings per share for the year which ended 30th of September 2018. So how do we compute this, or what do we need to compute the basic earnings per share? The first thing is the formula. You have to remember the formula. How do we compute this? So in basically, I've said we take the profit attributable to ordinary shareholder, abbreviated using such acronym, PATOS, divided by 1/0. 1/0, I've said in full, these are weighted average number of ordinary shares. Weighted average number of ordinary shares. So those are the 2 items we need to compute for us to then be able to compute what is required, the basic earnings per share. So let's start with this one, the PATOS. And in this case, you have to remember, how do we compute the PATOS? I've already explained how we compute this. So we take the company's profit after tax, less the preference dividends for that year only. And number 3, you less the profit attributable to NCI. Like in our case, I hope you can see at the paragraph 1, we are given the profit attributable to NCI. So, and also it is important to note that the figures which are given there at the paragraph 1, they are in thousands of shillings. So what we start with here is the profit after tax. Remember, the profit after tax is the same with the net income, is the same with the profit, the same with the net income, the same with the profit for the year. Now, are we given this profit after tax from this particular question here? Basically, that information, you have it at the paragraph 1. Do we have profit after tax? Yes or no? Yes or no? Hannah, John, Justice, okay, do we have that? No. So what are we given? You're given the profit before interest and tax. We are given profit before interest and tax. So how do we arrive at this profit after tax? Because that's what we need. So to arrive at or to get the profit after tax, we are going to take this one, profit before interest and tax. First of all, we take profit before interest and tax. We less interest, and interest is the same with the finance cost. Finance cost, interest is one and the same thing. So we less interest, and then we also less tax. We will get what? The profit after tax. And actually, all those figures are given. So let's take this profit before interest and tax for 2018. That is what we are starting with, which is given as a figure of 7012. That is profit before interest and tax. We have said we less interest, which is the same with the finance cost. And that is for 2018 is 987. And then we less tax. So the tax for 2018 is given as a figure of 1264. So that is how we get the profit after tax. So give me this particular figure here. And we try to hurry up so that we finish on time. Try to give me those answers. Once you get the answer, type it in the chat box there. I'll be able to get it. I'll be able to see it in the chat box. I hope you can see the chat box from your end. Yes, you type it there, you'll be able to get the answer. $7012 minus 987 minus 1264. What are you getting here? What are you getting? Magdalene is saying that it can't be 539. So I'm given 4761. So that is now the profit after tax. So then to this, we have said we less two items. We less the preference dividend. The preference dividend for the current year only. And then we also less the profit attributable to the non-controlling interest. So let's determine these two items, the preference dividends. So if we go back to still the information you have at the paragraph 1, we're given the preference dividends for that year. The preference dividends for this year are given a 60. We don't need to compute that. And then we also given the profit attributable to non-controlling interest as a figure of what? 160. So whatever you get here is the part loss. The profit attributable to ordinary shareholders. So this will give us what? 4761 minus 60 minus 160. I'm told that will give us 45, 41, 45, 41, 45, 41, 45, 41. Is that what you're getting? 45, 41, 45, 41, 45, 41. Yes. So then from there we need to move. So we already have that. So next we need to compute this. We need to compute the weighted average number of ordinary shares. Can you remember how we compute this weighted average number of ordinary shares? You need to remember, we have said to compute the weighted average number of ordinary shares. First of all, we take the number of ordinary shares which were issued and fully paid at the start of the year, and then we add the other shares which the company issued during that year. And actually, we have said that the shares which are issued during the year, you have to remember how we treat them. And actually, that is something we have discussed. So therefore, what we do, because we know that year started on this date, that is the 1st of October 2017, always you start with the date, and here you determine, you start with the balance brought down. Balance brought down, remember in this case, you have said that these are the shares which were issued and fully paid at the start. the shares issued and fully paid at the start. So, and I think there is some information which are given as far as that is concerned. Can we go to the additional information, actually to the information we have at the paragraph 2, where we are told you have also obtained the following information in respect of the company's share capital. So number 1, we are given the ordinary share capital as at 1st of October 2017, the start of the first year. 1st of October 2017, the ordinary share capital of the company was shillings 15, made up of shares of shillings 5 per value. Per what? Per value. So basically what you're given here, we are given the company's ordinary share capital, which we are told was shillings 15 million. And we are told this comprises of shares having a value of 5. So what do we need to do? We need to use this particular information here to compute how many shares were issued by the company and fully paid. So who can tell us, how do we compute the shares issued and fully paid at the start of the year? Take into account you're given this information. Who can tell us, how do we compute that? How do we compute? Yes, we divide. We need to divide. We take the ordinary share capital of the company, shillings 15 million, divide that with 5. Is it 5? Yes, divide that with 5. So this will give us 3 million. So these are the shares which were issued and fully paid at the start. And actually that's what we start with here. But our figures, remember, are in thousands of shillings. So we record that there as 3,000. So then to this, what we need to do, we need to check during this year, the first year here, were there some shares which were issued during that year? So we need to go to the additional information which are given. Like in the additional information number 2 now, we are told that 𝐂𝐏𝐀 Limited issued 500,000 ordinary shares on 1st of January 2018. 1st of January 2018, is it within the first year or second year? 1st January 2018 falls within which year? The first year or the second year? The first year or the second year, year 1 or year 2? 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 I'm not getting answers from Akina Raphael, Akina Hannah, Akina Alkay. Give me the answers here so that we move together. I know whether we are together or not. So 1st January 2018, does it fall within the first year or year 2? Yes, that is within year 1. So therefore, you come here and you say on 1st of January 2018, you say that there was issue. We know that on that date, the company issued shares at full market price. You come and write that particular transaction here. You just say there was issue at full market price in short form. So how many shares were issued here? The shares which were issued were 500,000. Now you have to remember what you have said. So those shares which are issued during the current year and they're issued at full market price, what have we said, or how do we treat those shares? Who can be able to recall? How do we treat those shares here when computing the one-offs? What have you said? How do we treat those shares? Who can be able to remember? How do we treat those shares? What we have discussed? We have said, what do we need to do to those shares for us to add them to these shares? Yes, we have said they are supposed to be weighted on time basis. You take the shares here. How many were they? 500,000, 500,000, 500,000. Remember, we are working with all our figures in thousands of shillings. In any figure, you omit the last 3 zeros. Then what we do, we weight them on time basis. We multiply them with the proportion of time they were held. So January, 1st January 2018, when is our year ending? That year September. From January of 2018 to that year of September 2018, how many months do we have? 9 all over 12. That is a proportion of time. Multiply that with 9 all over 12. 9 all over 12, which is basically the same with 3/4. This will give us what? This will give us what? Yes, I'm told that this will give us 375. 375. So that is it. Then let's go to the other transaction, number 3. Number 3 now, we're told that 𝗂𝐏𝐀 Limited also made a right issue of 10, that is of 2 new ordinary shares for every 10 ordinary shares which were held held as at 1st of April 2018. 1st of April 2019, sorry. 1st of April 2019. So 1st of April 2019, is it within the first or the second year? Is that a transaction for year 1 or year 2? A transaction for year 1 or year 2? Year 1 or year 2? That is a transaction for year 2. 2019 is within year 2. So therefore, that one we are going to consider that in computing the basic earnings per share for the second year. So and then number 3, what are we told? We are told that 𝗂𝐏𝐀 Limited also had 1,006,000 non-redeemable preference shares. So in computing the weighted average number of ordinary shares, we only deal with ordinary shares. We only deal with ordinary shares. We don't deal, or basically we don't consider here the preference shares in computing the basic earnings per share. That's why we are saying here we compute weighted average number of ordinary shares. So basically it means that during this year, we don't have any other transaction relating to the issue of shares. So this is now how we compute the one-off. So we add these two, that 375. So, and I think these now will be these are now our weighted average number of ordinary shares. And having that, now we can compute the basic earnings per share. This is the formula we are using. We take the PATOS, which we already have there. 4541 divided by what? By one-off, which is 3375. So the answer which we get here, we express it as shillings per share. Shillings per what? Per share. Shillings per share. What are you getting here as the answer? What are you getting? What are you getting here as the answer? 4541 divided by 3375. $1.345. 1.345 shillings per what? Per share. That's basically how we compute that. The items which are marked, for example, in such a question is what we have there. Are you able to determine the shares issued at the start? These shares, were you able to weigh them on time basis, and also those items? So let's move now to the second year, which is the year which ended 30th of September 2019. We compute the earnings per share, the basic earnings per share for the second year here. Basic earnings per share for the year which ended 30th of September 2019. So the formula remains the same. We don't need to repeat it. PATOS all of our notes. We don't need to repeat the formula. I think we can start by computing the PATOS. So the computation is the same. I don't think there is anything which will change here because the information given for 2 years are the same. So here we start with the profit after tax. And I'll say that this one will be equal to the profit before interest and tax for 2019, which is given as 830 minus interest or finance cost, 1045 minus the tax, which is 1718. And we get the PATOS there. Sorry, not the PATOS, rather, the profit after tax. So how much will be our profit after tax? How much will be the profit after tax? Profit after tax. 830 minus 1045 minus 1718. 69. Which is which? Sixty, 67. Okay, 67. And then now to this, we less the preference dividends. Preference dividends, which for 2019 remains 60. And then we also less the profit attributable to NCI. Profit attributable to NCI, how much is that? It is 180. It is 180. 180. So whatever you get here is the pathos. We get pathos here. We get pathos. We get pathos, the profit attributable to ordinary shareholders. Pathos, I'm told, is 5827. 5827. So, yes. So then from there we move and we compute this one. Weighted average number of ordinary shares. Weighted average number of ordinary shares. So for the weighted average number of ordinary shares, this one we work out that using the same format here. So we start, or basically we know that the second year started on 1st of October 2018. So what we need to do here is to determine how many shares were issued and fully paid by the how many shares were issued and fully paid at the start of the second year. Now that one you can't get it in the question. The first thing you need to know, you can't get this in the question. You can only get this information in the number of shares issued and fully paid at the start of the second year from the information we have in year one. So you come back here. So we know in year one, the shares which were issued and fully paid at the start of the year are 3 million. And then here, you come and you take the actual shares which were issued here. So how many shares were, or what were the actual shares issued by the company here on this date? The actual shares which were issued were how many? Who can tell us the actual shares? Yes, the actual shares which were issued are not 375, but are 500. But the reason why we don't consider this, or basically you can't take the balance brought down here to be equal to this, is because some of the shares here have already been weighted on time basis. But now at the start of the second year, those shares will be issued and fully paid. So you don't have to weight them on time basis at the start of the second year. So what you do here, you take the shares which were issued and fully paid at the start, then you come and you add the actual shares here. They were 500. So that means that at the end of the second year, at the start of the second year, the shares which will be issued and fully paid will be how many shares? 3.5 million. And then in this year, we know that there was a transaction which are given in note number 3. Can we go to note number 3? We are told that 𝐂𝐏𝐀 Limited also made a right issue of 2 new ordinary shares for every 10 shares which were held. On which date? On 1st of April 2019, the company made a right issue. Now, there is something I've said. This is something which is tested in all questions for earnings per share, the right issue. So therefore, you have to be very, very keen here to see how we deal with this particular right issue, because these are a concept which the examiner will test in all questions, because majority of the students are not able to deal with this concept of right issue. So remember what you have said is that a right issue, one, is whereby the company will issue additional shares to the existing shareholders of the company, but at a price which is below the market price. And therefore, what you have said is that those particular shares, they must be split into 2 components: the shares issued at full market price and the shares issued at nil what? Consideration. But now, when computing the shares issued at full market price, there is a price which you need to use, the theoretical X-rate price. Now, this is a price which the examiner will not have given you, and you have to compute it. This is something you did in FM, financial management, intermediate level, but here I will just show you a very easier approach of computing that without necessarily remembering that formula for computing the theoretical X-rate price. I'll just show you a very simple approach of computing the same. So now, the first thing you need to do here as far as the right issue is concerned is to determine how many shares were issued by the company during the right issue, because that is something which we are not given. If you go back to that point, number 3, we are told that 𝗂𝐏𝐀 Limited also made the right issue of 2 new shares for every 10 shares which were held. So meaning that during the right issue, the company was to issue 2 new shares for every 10 shares which were held. So even before we go to the other sentence, we need to come back here and we ask ourselves, before the company made this right issue, how many shares were held before the right issue was made? How many shares were held? Or in other terms, how many shares had been issued by the company before this right issue was made? Before the right issue, how many shares were held or issued is what we have there. That one, you can't get it in the question, but what we have up there, 3.5. So these are the shares which were held, or in other terms, issued. So what we need to do is to determine the shares issued during the right issue by cross multiplying, then dividing. So 2 times 35 divided by 10. So this will give us 700 shares. So that is what the first thing you need to do. Determine how many shares were issued during the right issue. Then let's go back to point number 3, and we are told in sentence number 3, the right price is basically the price at which these shares were issued at during the right issue. The shares were issued at a price of what? We are told that these shares were issued at a price of 42.5. So you need to come and put that price here. During the right issue, the company was to issue 2 shares, and each share was to be issued at a price of 42.5. And then you're told the market price per share at the same date. So when the company was issuing these shares, the market price per share was 48. So these shares which were held before, they were trading at a price of 48, because these are the prices which you need to have in computing the theoretical X-rate price. This is something you covered in FM, but I don't want us to even cram the formula for computing the right issue. For computing the theoretical X-rate price, I want to show you a very simple approach of computing the theoretical X-rate price. So how do we compute this theoretical X-rate price even without cramming the formula, which you're using in FM? You come here and you say, but it is a must, you have to arrange your work like this. The way I've done my arrangement here, you have to arrange your work like that. So you come here and you say, before the right issue, if you held 10 shares, because that's what you're told, if you held 10 shares before the right issue, then during the right issue, it will be issued with 2. So you say before the right issue, if you held 10 shares and each share was trading at a price of 48, then during the right issue, you are to be issued with 2 shares. Come and write those shares just below this. You are to be issued with 2 shares at a price of 42.5. You arrange your work like that, then it becomes very simple here to compute the theoretical X-rate price. It basically means that after the right issue, as a shareholder of this company, you'll be holding 12 shares, and then we need to determine what will be the total market price of these 12 shares. How do we determine the market price of these 12 shares? You take this times this, which will give us 48 for 80. This times this, which will give us what? 42.5 times 2 times 2, that will give us what? That will give us 85. 85, yes. So we add these 2, which will give us 565. So this now will be the total market price of how many shares? 12, after the right issue. But now, what are we interested with? We're interested with the market price of 1 share after the right issue, and the market price of a share after the right issue. That is now what we refer as theoretical X-rate price. How do we get the market price of 1 share after the right issue? We take this 565. We know that that is the market price of how many shares? 12. But we're interested with the price of 1 share after the right issue. So take this one, price of 12 shares. For you to get the price of 1 share, divide that with 12. That will give us what? And that is now what we refer as the theoretical X-rate price. That would refer as the theoretical X-rate price. 565 divided by 12. Divided by 12. Divided by 12. I'm told that will give us 47.0 what? 0.08333, like that. Yes. So this is something which you have to compute, and this way majority of the students get it wrong. Always, in fact, there is always a marks given for that. Theoretical X-rate price. Now, having computed that, you come back here. There is something we have said that these shares which are issued by the company during the right issue, they've said we split them into two components. That is something we have discussed right now. So determine how many shares were issued at full market price. Number one, determine the shares issued at full market price. I've given you the formula for this, and I've said to compute this, you need to first of all compute the amount received by the company. We are purely following the formulas I've given you here. So there is nothing to cram. You just need to remember the formula. How do we compute the shares issued at full market price? First of all, compute how much amount did the company receive from the right issue. The amount received by the company from the right issue automatically would be equal to the shares which were issued times the price which was to be paid per share during the right issue. During the right issue, the shareholders were to pay a price of 42.5 per share. That is now the amount received by the company. Then divide this amount received with the theoretical X-rate price. This is the formula which I've given. I'm following here. 47.08333. And then what we have said is that these particular shares, because they are shares issued at full market price, you have to remember the rule that they must be weighted on time basis. These shares were held from April to the end of September. How many months? We have April, May, June, July, August, September. Yes, September. Those are 6 months out of 12. 6 months out of 12. Then next, we determine the bonus element. The bonus element. Bonus element are the shares issued free of charge. We have equally given you the formula for this. I've equally given you the formula for this. The formula for this. Someone is saying my board is not clear. Is that the position? And the rest having a problem with my video?
Recording in progress.
Yes, Raphael, I think it is your internet which is not okay. So make sure you should, anytime you're joining these particular classes, the virtual classes, your internet must be okay. Your internet must be okay. Otherwise, if the internet from your end is slow, you will always have a challenge in terms of getting the video. Because I can see my video from my end is very clear, very, very clear. So it is the internet from your end, I think, which is having a problem. So let's move. I want us to determine this. We determine this, the bonus element. Bonus element, I've given you a formula. I've said we take the total shares which were issued by the company during the right issue. How many were they? They are this one, 700. And then to this, we less the shares issued at full market price. The shares issued at full market price is not the answer which you'll get here, but what we have here. Before multiplying those shares with a proportion of time, I always advise the student to transfer this down here. This, bring it here. 700 times 42.5, and then we divide that with 47.08333. And then, because these shares are the shares which were issued at nil consideration, we don't multiply them with the proportion of time. These are shares issued free of charge. Sasa, you don't have to multiply those shares on time basis. They are not weighted on time what basis. So give me the answers here. Give me this answer there and this one. So that then we can finalize. So the shares issued at full market price, what are you getting here? What are you getting up there? I'm given 631. 631. Let's just work with the figure to the nearest whole number. Can we take it as 632? 632. 632. I hope that is what you're getting. I need a confirmation that that is correct. $632. What about the bonus element here? The bonus element. The bonus element, what are you getting? No, it cannot be. It cannot K, that cannot be 68. Remember what I've said. I've said this is not what you're asking from this. Whatever you're deducting from 700 is not the answer you are getting there. So if you give me the 68, I can definitely tell that is wrong. That is totally wrong. You have to work out this. You erase it from that. Because I think you're taking the first one is 315. Okay, let's just take it to the nearest whole number. What about the second one here? Magdalene, what are you getting for the second one? Or 68. I just take it to the nearest whole number like that. Okay, yeah. So then I think that is okay. Okay. I thought you had taken 632 minus that one. Okay, so then what we need to do, we need to add all this because we don't have any other transaction. So add all that, give me the total here, which will be weighted average number of ordinary shares. Weighted average number of ordinary shares. What do you get? What will you get down there? 3884. 3884. 3884. Yes. So and I think now we are done because we have both the 𝗏 and 𝗏𝑡𝑜s. So just an issue of dividing. So we take this one, 5827 divided by this, 3884. So the answer will be in shillings per what? Per share. Shillings per share. So what is the final answer there? And the answer which you give me should be at least 2 decimal places. Not 1 decimal place, at least 2 decimal places. At least two. Yes, so 1.50, 1.5 what? 0. And actually, what I've said is also marked there is what we have there. What we have there. So that is it. That basically what was required is that small question for earnings per share. So the question was just requiring the computation of basic earnings per share for 2 years. So there was nothing to do with the diluted earnings per what? Per share there. Yes, I wanted to give you an assignment. I give you an assignment, and then make sure you also, before you meet, is it tomorrow or Wednesday? Before we meet, make sure you go through diluted earnings per share, because once we meet, we will just do a very an overview of the diluted earnings per share, and then maybe look on a question. So let me give an assignment on this. We have November 2018. So I'm checking for a question having only the recording the computation of basic earnings per share. November 2018, we have a question 5. Question 5, B and C. Question 5, B and what? And C. So you check on that particular question, attempt it. And equally what I've said is that before we do what? Before we meet in our next session,